Good evening, everyone. Just a quick one. Uh, Before we proceed, I'm not a licensed financial advisor, so everything in this video is based on my own observation to the market. So let's quickly run through some analysis I made on the 3rd of December, to be precise. So you can fact check from the previous video that was uploaded to see what happens before and what is happening now after I had pointed it out. So a quick one, this is our dollar index, which is our bellwether and as in our baseline when it comes to trading. Oh, sorry, my baseline, my bad. So we are watching these levels. We're watching this level, yeah. This sell side liquidity, that particular low, was watching that particular low. Then from the analysis for today, this will be what we'll be looking at the coming week. So we'll be looking at the fair value gap here, which has been highlighted here. So I expect the market to attack the low of this previous week, to attack it and go towards this fair value gap, then into this monthly consequent encouragement. That is that, so short. Then we proceed to, let's go to gold. I have left gold for a while because it was mad and it has went to 2148.990, which has been the highest of all time. So I expect some measure of turning back, but that will not be this. I will not be active on gold for the rest of the year because my objective has been met already. That is the buy side liquidity here and the consequent encouragement of this week here. So those level has been traded to and it has pushed and revert. So if I will be considering trading gold, it will be on the intermediate time frame and I will not be taking it for long. So if I will be interested in gold, this is what I'll be looking at. I'll be looking at the market to visit the buy side imbalance, sell side inefficiency here. That means the fair value gap here. That's the distance between the high the low of this candle and the high of this candle. So the single pass, I'll be expecting the market to trade down there if we go further, we'll be visiting this low. That is the low of 13th. So the low here, that's what we'll be looking at. Then if we see, if we could have a major drop, we can visit the sell side liquidity here, then go to the BC here. That is what we'll have on gold for the week. Though personally I'm not interested in trading gold for now, but the outlook, this is what I'm looking at, and if I should see an opportunity to enter, I will engage gold. So now we go back to the US 30 or the Dow. As out of on the 30th of this month, 30th of this month, this was what I'm looking at, and it panned out really fine. It panned out lovely. That's on the 3rd. So I was expecting these levels. All right, I was expecting the market to attack this level here. There is a buy side liquidity, that's swing high, and we have this week, the midpoint of the week is a consequent encroachment where I expected the market to visit. So it got there last week Friday, as in the day before yesterday. It was on Friday. So this was the market it traded to and through the level. So for now, I'll be nimble on US 30 to have further insight, because it has also traded to the highest of all time. So the next thing is for you to slow down and see what the market will have. Though normally we are already at the end of the year, so the market tends to be dead. The market tends to be dead, and it will be very easy to manipulate. So I'm not touching this until I see something better for me to engage in. And if I thought I'll be engaging it will be on a smaller time frame. That will be intermediate trading. So let's see what we'll have on S&P 500. Our S&P 500, what we are looking for on the 3rd of December, on the 3rd of this year, of this month, I highlighted the market going to the mid threshold and possibly visit the main threshold and other block of, okay, is on the monthly time frame. So this was what my analysis was based on, and you can see the market traded beautifully towards it. So there is an order block. um, we have an order block here. Then the mean threshold of the other block is the midpoint. So also we have the buy side liquidity here. So as you can see, the market has traded to the mean threshold, but yet to get to the buy side liquidity. So going forward, the coming week we'll be proceeding and checking if the market will gravitate, but I believe it will gravitate towards this level here and take out the buy side liquidity, because Dow has done it. So we expect the S&P 500 to do the same thing. So I'm making it very, very, very short. Then we proceed to Nasdaq, and that will be the last thing we'll be checking for the day towards the week. Also, as you can see, we have relative equal highs here. So the market and the algorithm tend to take away these highs. Okay. These highs. Let's see. These are here. That'll be the next buy side liquidity. Should I even clone this? Let me clone this. Oh. No. Why the delay? Okay. Let me clone this. Take it there. So the next level I'll be checking is so this is where we are in the market, and this is where we are expecting to reach. We are expecting to reach and go above this level the coming week. So it's just a matter of intermediate trading, because the market will be quiet as in indeed quiet. So we just look out for trades set up during the week if we had any high impact news, but I think we will not be having any high impact news starting from next week, because the market will be dead. Let's check the calendar to get there. So okay. Monday. This is all we have on Monday. No significant news. So the coming week we can still get something to trade, but from 25th everything is we have bank holiday off Monday and Tuesday. So trade carefully and trade maturely and have a nice trading week. We work on this and we'll be back next week to see before and after. So before we go, let me show you what the screenshots are like. So this was the screenshot for DXY. This was the screenshot on this DXY. You can see the market had traded to where we said the market has traded to the sell side liquidity. So we are looking at this, then this. That is for DXY. Euro USD. Oh, I've not mentioned Euro USD, but see, we have this level we are watching on Euro USD. The market has traded very close to this monthly objective. Then we have, you can see the market has traded through and through this level. When I add the analysis, the market has not traded to the consequence encouragement, but the market has traded through and through the consequence encouragement. Also, S&P 500. S&P 500 was here, but now S&P 500 has traded towards that level here. It has traded, it has gone and passed through the buy side liquidity we have here. Also US 30. US 30 was here and US 30 had traded through and far below this level now. So this was the outlook before, and you can check what we have before and what we have now. So let me quickly run through the Euro USD and we call it a day. So what we have on Euro USD, I think it will have my interest. Euro USD, from the screenshot we showed earlier, come up. From the screenshot we showed earlier, you can see the market had not delivered this buy candle then. This particular candle here, the market has not delivered it then. Let's check it here. Oh, auto rotation. You can see the market has not delivered it. So now you have it already. So the market has already delivered it here, and then I expect it has not completely delivered it, but it's very close. What we have here was what we have before was this, so we now have this. So it has come down a little bit. Then we expect to see this level taken out. We take out this level, then we move towards this level. Yeah, I think that is all we have. That's all we have for for the week and the coming week. Okay, before here we have to visit the consequent encroachment here. The consequent encroachment of this level, we have this level here. So we have 1.11328, 1.11328 to 1.11328. Let me take the coordinates right. 1.11328. Okay. Coordinates 1.11328, 1328. So that's the main threshold of that week. I'm sorry, that's the consequent encroachment. The consequent encroachment. And the monthly consequent encroachment, 3rd of July, right? 3rd of July. 3rd of July. Week. 3rd of July. Consequent encroachment. Then let me put it at the middle. Then go straight to the center. So this is all we're watching on the long term for Euro USD. So let's see when the market will give us the opportunity to trade. That is it on the weekly chart, on the weekly time frame. Also this. So I've seen a trap already. You can see we respected this BC, this fair value gap last week. So if I thought we are to go down, we'll be going down max. The max movements we might have where we do not have sufficient. This is the next imbalance we're having, and with the fair value gap we were having, and then we expect the market to react off from there, or the worst scenario, we'll be expecting a reaction around this area. Anything beside that, we leave it. This and this. Anything beside that, if it's coming down, it gets to this level. It gets to this fair value gap. The moment it passes through this fair value gap, the next PDRA is this other block. The moment it gets to this other block, we expect it to go higher. But if it does not go higher from there, we cross our hands. It might get to the other block. It might decide to react at the fair value gap. It might even decide not to get to the fair value gap before going to the objective. So the bone of contention is that I'm still bullish on Euro USD. Thank you. God bless you.